And now, as things stand, they have become the largest profitable, revenue wise, geography wise, reach wise. They have become the biggest retail company in India. So should you go and invest in Reliance Retail? Hi everyone, welcome to today's video. So recently I did a poll on my YouTube channel where I asked people that which is the best retail company in India. In case you have not given an answer on that poll, please pause the video and please type out your response in the comment box. While you are at it, please like this video as well. So the results were quite interesting and a lot of people voted for DMart. Do I agree? Do I not agree with that perspective? I will let you my comments on that scenario along the video. So on this video, I am going to analyze the retail space in India from Reliance's perspective. Why is that? Simply because I have already made a lot of videos on ITCs. So you can go and check some of my previous videos on that topic. I have already talked about quite extensively on Hindustan Unilever. So you can go and check out those videos as well. I will put the links in the description box. But on this video, let us start by analyzing the story of Reliance. And the story of Reliance is very, very fascinating. This is what the Reliance revenues looks like in 2015. And you will see that majority of the Reliance's revenues were made up of what? It was made up of oil and gas and petrochemicals. Now take a look at this chart, 2019. Here, literally, very less revenue were made of petrochemicals and oil and gas. So over a span of 4 years, Reliance rediscovered itself. In fact, if you study the history of Reliance, what you will figure out is that it transitioned from being a textile-oriented company, then to petrochemical company, then to tech company, and now more towards retail company. Why am I saying this? Because this is a statement from one of their managers, which says that every 5 to 6 years, we have to rediscover ourselves. If we would have not rediscovered ourselves, we would have stuck as a textile company and we would have gone out of business. This is a very interesting statement because Reliance has been able to successfully rediscover its new set of businesses almost every single decade. Currently, if you study the portfolio of Reliance, it is a 200 billion market cap company. And out of that, the total market cap or potential market cap of Reliance Retail somewhere comes around $80 billion to $125 billion. People assume that Reliance Jio is bigger, but it is not. It is actually Reliance Mart, which is bigger than any of its subconglomerates of the Reliance Corporation. But the most interesting part of this story is that Reliance Retail came into existence in 2006, and in roughly 15 years, it has literally shook India in terms of how much growth it has attained so as to become the biggest part of Reliance conglomerate. And even if you demerge Reliance Retail out of Reliance, it will still become a substantially big company just in a 15-year period. So 3 things that we are going to talk about. One is that how Reliance Retail became such a big company in such a short span of time. Number 2, is it going to maintain its competitive advantage and is it going to survive against more established players like ITC, Hindustan Unilever, DMart, etc. Third and finally, should we be investing in Reliance, wait for it to demerge, or keep taking positions in other retail companies? That is the precise discussion that we are going to have. Also, a big shout out to our sponsors for today, which is ET Money. They have come out with a specific membership called as ET Money Genius, which can allow you to build customized portfolio. Now, many of you might not have time to sit and study stocks, recurate your portfolio. So ET Money Genius can help you with that aspect. So you can go check the links in the description box. Also, I have prepared a short brief where I have highlighted the pros and cons of investing via ET Money. So you can go check that out as well and make a more informed decision. So let us get the discussion started, and first and foremost, let us quickly discuss that why is it that Reliance is focusing so much effort, time and energy in terms of amping up and building up its retail game. So this is what the market for retail in India looks like, that right now it is roughly a $700 billion industry depending on how you're defining it. And as per an A.T. Kearney study, it is projected that by approximately 2030, the industry size will 2.5x. So it will go up by 2.5 times the value. So this is just one part of the equation. Another related part is that within this retail segment, the e-commerce or digital segment is going to exhibit almost a 25 to 30% yearly growth rate. This is massive, and this outlines one of the biggest opportunities in the next 5 years in India. So therefore, retail becomes a very important segment, and that is precisely the reason why Reliance, Tata's, DMart, all these companies are pushing quite aggressively not only offline retailing but also online retailing. And e-commerce major giants, for example Amazon, they are pushing offline retailing. So they are trying to build omni-channel. So omni-channel simply means that they want to be ubiquitously present all across the board, right from internet to physical stores. Now, the most important point that people forget about retail and the importance of retail is that retail becomes an upselling opportunity. So there is a specific word which is used in marketing called as upselling. It simply means that you enter a shop to buy atta chawal dal, but you would have seen that near the store counters, the cashiers or store managers strategically put like chewing gums, they put like little candies and all that stuff. Why? Because at the time of checkout, when you're spending 1000 rupees in your daily groceries, you would not mind spending 10 more rupees buying some chocolate for your kid. And especially if your kid is with you. For example, I have a 2-year-old son. Whenever he accompanies us to grocery store, you have to get him that chocolate because he sees it. It is kept that way, and this process is called as upselling. So upselling becomes a very important game from a retail point of view. Think about it this way, that Amazon started by its e-commerce business. Slowly, it expanded into a series of different businesses, right from publishing to streaming to logistics and a bunch of other different services. What has allowed them to do it? Retail and access to the retail data, what they are selling in a particular geography, region, etc. That is the same reason why I feel that a company like Zomato might maintain its moat going forward. Why? Because it is maintaining its moat in retail and logistics, and going forward it can utilize all this data to expand into other different services, and this becomes a massive advantage. And this is one of the prime reasons why majority of the big conglomerates are jumping into the retail space, because they understand that if you have to sell high value services, probably starting with retail and building a brand among common people might not be a bad idea. This brings us to point number 2, that the retail part of Reliance, is that big? Is that good? Is that weak? Can we have some commentary around it? Okay, so this is what Reliance retail business looks like. As we discussed earlier, that it started in 2006. So it has not been that long that Reliance has started building its retail business. Over the years, they have ended up acquiring a lot of companies. For example, a company called as Hamleys was a premium brand company, and they ended up getting acquired by Reliance. Similarly, you have Reliance Fresh, Reliance Mart, JioMart, and several strategic acquisitions have already taken place for Reliance, which I will talk about in a minute. But the overall structure of Reliance Retail is very complicated because it contains a series of different companies which fall under different umbrella. For example, Hamleys sells toys and 7-Eleven is a convenience store. So the nature of business is very different, but they all fall under Reliance Retail umbrella. Now, talking about the strength of the company, it is fairly simple that right now it is sitting on a stockpile of cash. For example, they currently have $2.3 billion of cash sitting with them, which gives them a lot of opportunity to go and acquire a series of different companies and expand inorganically in a very short span of time. In fact, this is a strategy that they have displayed time and again, and there are two parts to this strategy. So these are series of firms that Reliance Retail has ended up acquiring. Now you would say that, okay, where did they get so much money to acquire so many different companies in such a short span of time? Okay, so here is where the genius strategy comes in. So the first part of the strategy is that you get a lot of money for cheap. So this is called as raising cheap debt. For example, in 2020, you would have seen that the interest rates were very low. So what was the situation then? The situation was that you could have raised as a company a lot of debt, and Reliance did exactly that. They ended up raising a lot of capital during a time when debt was cheap. During the phase when interest rates are low, there is a lot of money available in the economy, and Reliance ended up getting companies like Google, Facebook, Silver Lake Partner on the cap table and do cash infusion in their company, and they were able to aggregate a lot of capital at very low prices. Now comes the second part of the strategy, because once you have raised cheap capital, so to say, what do? You wait for companies to come down in valuation. And Reliance is very good in terms of assessing it. So here is a very quick snippet as to how Reliance acquired Urban Ladder. So back in the day, Urban Ladder's valuation were very high. Reliance waited for it to correct, and it fell by almost 85%, and then Reliance went in and acquired that company. Same goes for Just Dial, that they ended up acquiring the company at almost 55% discount. Now this is very contrary to Tata's philosophy of acquiring companies, that Tata, for example, acquired 1mg at almost 100% of its valuation. The same applied to Big Basket, that they paid top dollars for acquiring Big Basket. So while Reliance raised cheap capital, acquired companies at a discount, Tatas were doing slightly opposite. Of course, we can find counter examples, but adopting these two strategies has allowed Reliance Retail to grow really fast in the last 15 years. And now, as things stand, they have become the largest profitable, revenue-wise, geography-wise, reach-wise. They have become the biggest retail company in India. So should you go and invest in Reliance Retail? So right now there is no mechanics of investing just in Reliance Retail. You have to buy the Reliance stock. But there is news that there will be Reliance Demerger, because Ishan Bani is going to manage Reliance Retail. But before we get there, let us understand the pros and cons of the company. So the first key advantage of Reliance Retail is its sheer dominance as of now. Not only it has the highest revenues, profitability, market share, etc., but going forward, its dominance is set to increase as per experts. For example, here is a study that was done by Goldman Sachs, and they predict that JioMart will have 50% of market share in the online grocery segment by the year 2025. If you take a look at the presence of JioMart across different cities, you will see that Amazon Fresh is present across 9 or 10 cities, Flipkart is present across 5, Swiggy is present around 50, and JioMart is present around 200 odd cities. So the scale of operation is already too big to begin with. Now the natural question comes that, okay, why is this the case that they are able to generate so much business? One primary point there is the number of app downloads. So here is the breakup of app downloads for JioMart vis-a-vis their competitors. And you can see the volume of JioMart app download is humongous, right? So that's a simple message there, that the dominance of JioMart is not coming down, and that will help other segments of retail within the Reliance Retail community. Now, the second key point is a synergy based point. So synergy simply means that Reliance owns a series of different businesses. They have big partners who are working with them. For example, Facebook can power up WhatsApp and form a partnership with Reliance Retail in order to find synergies. Synergies means mutual benefits for both these companies. And that is what Facebook and Reliance Retail are actually doing. So I will read this out for you, that there is possible integration with WhatsApp during Facebook $5.7 billion investment in Reliance in April. It was clear that Reliance Retail would be leveraging WhatsApp's existing large user base in India to reach out to new customers. In return, WhatsApp pays possible integration with JioMart will give Facebook the much needed kickoff for its payment feature. So this partnership is huge and is beneficial for both the parties, and this becomes one of the massive competitive advantages for a company like Reliance. Now comes the third key advantage of Reliance Retail. It is very simple. It is the brand building game. This is both an advantage and disadvantage. The advantage being that they are actually expanding across fashion, luxury segment, and a bunch of other different avenues, and they are trying to scale up and build their brand. The disadvantage is that they are trying to compete head on with companies like Hindustan Unilever. Will they be successful? Will they not be successful? I will not try to cast any theories here because this is not a binary answer. But the good news here for Reliance is that they are actually playing the brand building game, and with the brand building game, if they are able to do it really well, they will become a premium segment brand and will be able to have a better pricing power. So all these advantages, the current dominance, existing partnerships with multi-billion-dollar companies, and a very clear brand positioning game that they are playing, it makes Reliance a force to reckon with. So this is the phrase for today, force to reckon with. Let me know what does that mean. Now let's quickly take a look at the disadvantages of considering something like Reliance Retail. So there are three specific disadvantages that I would like to talk about. First is called as generalist versus specialist game. When it comes to DMart, there is a very clear positioning that when you go to DMart, you are getting products for inexpensive prices. That is the positioning around which the DMart brand has been built. Same positioning was taken by Kroger's, and their only objective in terms of running their store was do it very effectively at a very low cost and offer products for cheap. That is what they were doing. DMart is doing the same. When it comes to Hindustan Unilever, they want to project little bit of luxury aspiration. So there are very specific positioning that has been taken by Hindustan Unilever and DMart. Reliance, unfortunately to me, as of now, looks like stuck in the middle. They are not sure which direction to go. Yes, they are trying to get a lot of customers and they would try to assemble a strategy on the fly. Is that a win? I don't know. Additionally, another layer of complexity for Reliance Retail is that it is a very confusing business. It comprises of so many different segments: toys, retail, online, offline, B2B, B2C. So the problem that has become with Reliance Retail is that analysts are not able to assign a value to it. So you would not know whether it is underpriced, overpriced. Everyone will give speculation around it. Second key point is around the accounting matrix. So this is a study that was done by Ken, where they talked about the profit margins of Tata owned brands vis-a-vis Reliance Retail owned brand. So I will read it from here. For example, if you take a look at Reliance Retail's bottom line, its margin in apparel in the year, apparel means clothing, in the year ended 2020 was 20%, which is very high. If you consider even the super successful brands like Westside, which is owned by Tata, their profit margin makes up only 11.5%. So I don't know, I can't comment on accounting standards, but the instance that I can remind you of is that between 2008 and approximately 2018, Reliance did not give any money back to its shareholders, so to say. The stock price got stuck. You will say that it's not Reliance's fault. Actually, I can make a separate video on that. And I will not say much on that topic. But for the time being, please be a little considerate as per the total numbers that you're seeing for Reliance Retail. An additional chart can be seen from here that despite the fall in revenues, the retail margins have actually risen. This can happen. This is not necessarily a malpractice, but you should look into this more closely. Now comes the final point, which is around the demerger news of Reliance. First and foremost, there was a lot of hoopla and news that was created in the market that Reliance Retail is going to demerge from Reliance and it will be listed as a separate share and the stock price rose, whatnot, right? So this was just news. It has not materialized yet. My theory on that is that they are waiting for the markets to recover and then they will probably demerge it from Reliance to unlock a lot more value. But this demerger thing can be a problem, and the traces of which can be found in the previous generation of the Ambanis. For example, when Mr. Dhirubhai Ambani passed away, there was dispute between Mukesh Ambani and Anil Ambani, and there was a vigorous battle that was fought in court. Now, if no succession planning is done at Reliance, right now Mr. Mukesh Ambani has announced that okay, Isha Ambani is going to take care of certain businesses and Akash Ambani is going to take care of certain other businesses. But this demerging always comes with a massive cost. To me, it looks like a problematic scenario. Counters can be built that, you know what, Mr. Mukesh Ambani would have learned his lessons. He would have instituted proper structure guidelines in terms of separating the businesses. So he would have learned his lesson and he might be working from experience here. But demerging such a big company will always come with its own set of challenges. So please be aware of that. I will wait for the stock to get demerged, the company gets demerged, and then I will make a final call on this. I have no interest in investing in Reliance as of now. But yes, please make your own call. What is my final verdict as to which stock I think is the best? So two contenders there. One, I would say that if you're looking for slightly more luxurious brand, HUL is probably the best FMCG or retail based stock as of now. It has massive advantage, massive moat. Why? Because it has massive branding power, which is not there with any other company as of now. Second key company that I would be bullish about is DMart, but here the problem is that it had already reached an overvaluation stage. The valuations are correcting. Yes, results are fine. It is growing well. All good things are happening, but the valuations are crazy. So from that particular perspective, I would place Hindustan Unilever over DMart. Is this a recommendation to buy? No, absolutely not. Please do your own due diligence. But I hope you enjoyed the video. You learned a lot about the retail space in India. Do let me know in the comment box and I will see you soon.